Good afternoon, Fabian Onetti with Winston Capital, and we're going to cover the week of November 4th to November 8th. The theme, I think, is no recession incoming, and the global slowdown is over. A lot of data came on the last week around the world of a better economic tone, and the markets know about that. So let's start a little bit with just the recap of the week. The S&P was up 0.8%, the Dow was up 1.2%, and the Nasdaq 1.1. It was 5 weeks of consecutive record highs on the S&P, so that is going up for 5 weeks. Excuse me. So very positive for that. Excuse me, 1 second. Oh, there you go. Something in my eye. Sorry. Uh, that was very positive. And let's look into why is that. One thing, the Dow Jones Transports is moving very high, and remember, this is a very good early indication of economic activity, of good cyclicality in the markets. So we think that that's a very positive development on that side. The Chinese consumers starting today celebrating the very famous Singles Day, which is larger than Black Friday or Cyber Monday or Amazon Prime Day. It looks like, as I was looking today in the afternoon, that the start apparently is amazing. And the numbers were staggering, $30 billion of sales in a day. And apparently there are like 15,000 streaming brands on AliBaba. It's mainly for the Chinese market. People like Kim Kardashian, Estee Lauder, you name it, are doing promotions and things of the like. Quite something very interesting. So we'll see more of the results there. Speaking about no recession and no global slowdown, we have the first reading of Q4 on the Atlanta Fed. GDP is around 2%, just a little bit, under 2%, 1.5%. So positive for that side. In Europe, we got some good collection of good news. The Q3 GDP came at 0.2% higher than the expected 0.1%. Also, the IFO that measures Germany consumer sentiment or business sentiment was very positive. European retail sales came at 3.1. The market was expected 2.4. So clearly, we had a good rally. The DAX and the other very cyclical indices rallying along. So clearly, as I say, there is no recession, and we have better and better numbers coming around. Emerging markets is trying to wake up somehow. We had that the S&P has been doing very well. EEM, which is the MSCI Emerging Markets Indices, has been underperforming. But over the last couple of months, we have had better numbers on EEM. So we'll follow that. There is some shops and houses that are talking about a better feeling for emerging markets. We'll see to that. In Brazil, a collection of two bad news. On one side, the highly anticipated auction for sorry about that. Auction for the oil fields was a complete fiasco. Of the four oil fields that were up for auction, only two good bids, and only by Petrobras. So clearly disappointing. 2% down in the real, a little bit because it was expecting, all the money to come in. And then on Friday, on a very, very conflictive ruling by the Supreme Court of Brazil, President Lula was freed from a 9-year prison sentence. The ruling basically says that as far as you appeal a ruling, you can go home for white-collar crimes, not for violent crimes. So this will open the door for Lula and almost all the executives on the Lava Jato, since these are white-collar corruption crimes, not violent crimes, so they can be home as far as they are appealing their sentence. The appealing process in Brazil, which is very long and complex, according to experts, could take as long as 15 years. We'll see what's the market reaction on that. As I speak, also, Evo Morales of Bolivia has resigned. The American States, Organization of American States, after auditing the elections, said there was widespread fraud. He was calling for the elections, but apparently the military and the police have said that they will not repress the people, so President Evo had no choice but resign. and also we have a continuing of demonstrations in Chile. So with news of Lula in Brazil, Bolivia, Chile, clearly the region is, I would say, very, um, volatile. That's a good word. Probably I was looking for the right word. I will see what's the story there. Um, Finally, on the same news of good economic news, XLF, the bank index, is breaking out of a multi-year top. We have the same in Germany. The curve is steepening. That's good for the banks. That's positive. So we like it there. And finally, we have the China-US issue keeps being a yo-yo. It looks like they were rolling back a lot of the tariff along with the phase one a deal, but it looks like it might not be. It looks like White House did not quite agree with that. So we'll follow on that and see what happened. Not much coming this week. CPI, PPI will follow like always. And remember, tomorrow, Monday, bond markets are closed, so only the stock markets will be open. So it will be a little bit of a less liquid session. Like always, you can get all information in our webpage, winston.capital, and every morning at 8:45 a.m. New York time for our subscribers, live streaming from New York. Have a great week.